Is there a disconnect between these two sets of data here, Helen?
Well, I think that indeed the people's expectation has been going up and up because that people were largely expecting that going from Q2 to Q3, we should see further improvement. And indeed, we have seen improvement from the very big and strong rebound on the industrial side. I think what is a bit surprising, however, is that if the overall headline numbers are still below 5%, that implies that the service sectors are still slow in playing catch up. So that, I think, could be the most important element to explain that the consensus was actually going all the way to above 5% to all the way to 5.5, according to Bloomberg survey. But in the end, when people look at 4.9% and combine it with all the industrial side of data, the only explanation is that service sectors have been slower.
Absolutely. So is there anything that we can use from this? Of course, there is, but which would tell us about what we're going to see for the whole of 2020?
Well, I think that very importantly, what we have learned from the data today is that we still are seeing what China is very good at, playing very strongly over here, which is number one. If you look at the industrial side, it has been very strong, supported by the domestic demand as well as external demand. Don't forget that last week we have seen the export numbers coming in at very strong, close to almost 10% in year-on-year terms. And at the same time, we can see that the investment demand is quite strong. If you look at fixed asset investment growth from a year-to-date perspective, already turned positive, and then if you look at one single month, it is also at a higher growth rate compared to previous months. So every single month we have seen a steady improvement over there, and in particularly not only infrastructure but also property investment have been very much helpful. So that, I think, is the industrial side of the story holding up really well. But at the same time, I think this really also highlights the very fact that the economy is not entirely back at the strongest shape. The problem is that we still have services sector that are currently not doing that well. If you look at the breakdown of the household spending, especially on services, I would say that those that are in education, traveling, and also medical, healthcare, etc., these ones are still down in year-on-year terms in the first 3 quarters by double digit, and implying that the government probably should stay neutral at the current policy stance instead of trying to tighten anytime soon.
And Helen, I want to bring in consumption. We have the National Bureau of Statistics saying that China's consumption contribution to GDP growth is 1.7%. It shows consumption remains lackluster. In fact, 9% less in the first 8 months of the year versus a year ago. What assumptions are you making about consumption, and how will that weigh on growth going forward?
I think consumption is very important to watch, because if you look at retail sales, the consumption of goods over there have already suggested that, were proxied by this retail sales, already suggested that they are firmly coming back. Not only if you look at the September data, right, which Rich just quoted, it was already up to more than 3% compared to 0.5% in August. But at the same time, I recall that in the first 8 days of October, that's the Golden Week data, it was actually up by 4.9% retail sales overall, which is predominantly the spending of households on consumer goods. But if you go beyond that, I would say that this is also suggesting that for consumption to play, a full comeback sometime soon, we probably need to see more services playing catch up. Don't forget the fact that China used to see consumption of services growing faster than consumption of goods in the recent past before COVID. So it was still very much lingering in the current state, being affected by the COVID concerns as people worry about going outside and probably travel as much as they used to in the past. And therefore, I would say for the remainder of 2020, right, it's very important for people to keep confidence.
Is the data encouraging enough, Helen, you think, for the PBOC that it will raise rates again next year?
Well, I think the market is increasingly worried about that. The market is worried that given that earlier in the year, the PBOC has cut twice and altogether by 30 basis points in the MLF, and then, that was passed on to the LPR, the loan prime rate, people were worried that, the PBOC would come back and hike it back on in 2021. We don't necessarily think that they should be in a hurry to do that, and we don't think that they will be given the authorization to do it immediately. The reason being that, as you saw today in the data, I don't think that we could jump too much ahead by assuming that the Chinese economy is fully back on. We are still having a large chunk of the economy, despite all these data on the industrial side being very strong. The service sector are still very much, under the weather, and we need to keep the lending costs at a very low level. So we are assuming that the key policy rates in China will remain unchanged for 2021.